Imagine opening your bank app and feeling calm instead of anxious. You know what is there. You know what changed since last month. You know whether you are moving forward or slipping backward. That feeling does not come from being rich. It comes from being aware. Awareness is the foundation of every financial goal worth setting. Financial goals begin with one simple question. Where are you right now? Not where you wish you were, not where you hope to be someday. Not where you think you should be compared with someone else. Your real starting point is the only honest place from which any progress can be measured. You cannot measure movement without knowing where you began. Progress requires a starting point. Without one, you are only guessing. If you do not know what your bank balance was yesterday, last month, or last year, how can you know whether you made progress? The numbers tell the story your feelings cannot. A growing balance gives peace of mind. But tracking that balance gives confidence. These are two very different things, and only one of them is in your control. Tracking turns a vague hope into a visible path. When you can see where you are, you can plan where you are going. That is the difference between wishing and deciding. Income works the same way. If you do not know what you are earning now, what you earned last year, or what you earned the year before that, how can you tell if your income is increasing? More importantly, how can you tell which choices, habits, or opportunities are helping you earn more? The data reveals what the feeling cannot. Where is your money going? Interest, groceries, lottery tickets, restaurants, subscriptions you forgot you had? Just knowing where your money goes influences how you spend it. Awareness creates friction. That small pause before spending, asking yourself whether this purchase is truly necessary, can change everything about the outcome. Reducing expenses makes it possible to increase savings. This is one of those areas where the smallest change can make the biggest difference over time. I choose to think about every purchase. Do I need this? Is this an impulse purchase? Should I shop for a better price? That habit alone has saved me more than I can calculate. I do not do without everything I enjoy, but I do try to shop for value. The goal is not deprivation. The goal is intention, spending deliberately on what truly matters. Charles Givens made this point memorably in his book Super Self when he wrote, "Where you is where you is." The grammar may be playful, but the lesson is serious. In my research for this video, I found a song by Fatboy Slim called "Where You Is." The repeated line makes the point impossible to miss. Where you are matters. You cannot navigate from a place you refuse to identify. The same principle appears in every serious practice of self-improvement. Whether you are creating wealth, building peace of mind, planning for the future, or gaining control over your time, you must begin by identifying your starting point. I began using Quicken to track my spending because I realized I did not really know my own financial life. I had a pension and Social Security that sounded reassuring on paper, but feelings are not records. I could tell you whether I felt comfortable or stretched, but I did not know exactly how much I spent on groceries, clothing, entertainment, gifts, insurance, repairs, or all the small purchases that quietly disappear into a month. When I received a free copy of Quicken with a new work computer, I decided to install it on my home computer and follow the setup instructions. The recommendation was simple: start with only your checking account and track your cash spending. The software also suggested using its existing spending categories rather than creating new ones. That was advice I should have followed. I created numerous detailed categories that seemed useful but became more of a burden than a benefit. The habit slowly grew. I added my savings account and credit cards. Over time, I included nearly all my assets using Quicken's home inventory feature and investment tracking tools. That kind of information changes how you think. Your finances stop being a mystery and become a map. You can see what is working, what is wasteful, what is growing, and what needs attention. I do not recommend using investment tracking software in great detail. In my experience, it requires more effort than it is worth. Instead, I simply track my investments by making a monthly entry to record gains or losses. At the push of a button, I can compare my bank balance and wealth at any time. If you are a visual person, graphs and pie charts can show you more information than you may ever want to know. Once you can see it, you can manage it. Never pay credit card interest if you can avoid it. Pay your credit card balance in full before the due date. Credit card interest rates combined with fees can turn ordinary purchases into extremely expensive mistakes. In his book, Your Wish is Your Command, Kevin Trudeau describes consulting for a credit card company to find ways of extracting more profit from cardholders. Increasing the interest rate was not the only option. Fees could be added for late payments, annual renewals, lack of use, going over the limit, and membership. If you're not paying off your credit card balance each month, consider advice from Dave Ramsey. Stop using credit cards, then choose a payoff strategy. Smallest balance first to build momentum, or highest interest rate first to save money. Never take a payday loan or enter into a repurchase contract unless there is truly no other option. These arrangements can trap people in cycles of borrowing that are very difficult to escape, and never borrow from lenders that front-load interest using the rule of 78s. Paying yourself first is a core personal finance strategy where you prioritize saving immediately upon receiving income, rather than saving whatever is left over. It turns saving into the first decision, not the final afterthought. Traditionally, people pay for housing, groceries, utilities, transportation, and entertainment first, intending to save whatever remains. But expenses naturally expand to fill available income. By the end of the month, there is often nothing left. Reverse budgeting flips this process. Determine your savings target. Transfer that amount immediately when you are paid, then live on the rest. Your savings are protected before the month even begins. To get started, automate your transfers so they happen the day after you are paid. Start small about small. Even $5 per paycheck builds the habit. Use a high-yield savings account. And prioritize employer retirement plans like a 401k or IRA. The best financial advice I have ever received came from Warren Buffett through a video. For most people, a low-cost Standard & Poor's 500 index fund is extremely difficult to outperform over the long term. Over 18 years, I turned a few $1,000s into a six-figure account. The American dream of home ownership deserves careful thought. Do not be too quick to buy simply because you have been told owning is always better than renting. Run the numbers, include maintenance, insurance, taxes, repairs, and the value of your time. Financial goals are not just about money. They're about freedom, peace of mind, and choice. When you know where you are, track where your money goes, avoid expensive debt, pay yourself first, and make decisions with patience, you give yourself a real chance to build the life you want. Start by knowing where you are. Please like and subscribe to support future videos.